Today's episode of Animal Spirits is brought to you by Birddogs. Ben, I was at Little League yesterday. Name escaped me for a second. That's what they call it. Little boys playing baseball. It's called Little League. And one of the moms, I was wearing pants, and she said, "Are those bird dogs?" They happened to not be bird dogs. They were not. I was not wearing bird dogs, but we got into a conversation about bird dogs, and she doesn't know that we're affiliated in any way.
Wow.
She just brought them up.
Brand recognition.
And then we were talking about, how did this come up? She was saying that she was asking me, I said, no, but I do love bird dogs and I love the shorts. And so she was asking me what seam length I get. And I was like, I don't know. She goes, you know. I was like, okay, you got me, fine. I get the 9-inch ones. Is that the ones that I get?
You get the longer ones? Yeah. So you go nine. No.
But I was telling her that I feel uncomfortable with, it's a little bit new to me. The shorts above the knees, because when you sit down, they hike up a little bit and I feel a little bit naked, comfortable, but naked. And so she made a great point. She said that her husband was on to bird dogs early days because actually, if you wear shorts below the knees, it doesn't make your legs look good because like your calf is like the biggest part of your leg. So anatomically, if you have the shorts above your knee, you get like thigh, knee, calf muscle, and it makes your legs look jacked. And I said,
it looks more sculpted. I got the 7-inch, and I also don't skip leg day like you.
Wait, 7 inches short.
7-inch. That's
all right. Well, you were running back. You were running back.
I have shorter legs as well. And honestly, my most comfortable fit is the bird dogs, but I have it on because it's like 85 degrees out. Bird dogs and with a nice Hawaiian shirt, it pops. And I have the bright blue, neon blue ones with the pink and yellow on the back are just
party down below, party up top.
Yes. Birddogs.com/spirits. Put in code spirits and you get a free tumbler. It's a Yeti tumbler, I think, right?
Yeti style.
Yeah, Yeti style tumbler. Sorry. I mean, that's all you need is a style because millennials are so... Anyway. Birddogs.com/spirits and get your Yeti style tumble. I can't talk. You know what I'm trying to say. Welcome to Animal Spirits with Michael and Ben. Michael.
Ben.
Can we pronounce the bear market as being over? Dead? Done? Or do we have to wait for new highs? Because I tweeted this out on Friday. From the lows in October, S&P 500 up 21%, NASDAQ 100 up 36%. I'm rounding up here. Close enough.
Well, it became official this morning.
What's official? That the bear market is over?
No, that we rallied 20% from the bottom.
No, this was as of last Friday. It was up 21%.
No. Officially. It was official today. We're recording on Monday, by the way.
Okay, became official. So does that count in your book that bear market's over?
Well, let me say this. Okay. This is from Bespoke. This is wild. The S&P 500 is now exactly flat on a total return basis since the close on Powell's first rate hike on March 16th, 2022.
Wow. So, because a lot of the losses front ran those first rate hikes, obviously.
Correct. So I am ready to pronounce the bear market from legitimate fears of higher cost of capital, Fed acting aggressively. That bear market is in fact over. I don't think that there's anything at this point that the Fed could do that would shock the market. You know what I mean? However, I think it's too early to declare that we're in a new bull market because I think legitimate fears of a potential slowdown ahead, even though we're not seeing any evidence of that. So I think, yes, the bear market that was caused by interest rates and inflation, rest in peace.
This is semantics here, but sometimes it's fun to argue semantics in finance because what else are we going to talk about? But I think you could say that does a bear market precede a recession, then of course that was wrong. The stock market did not predict a recession. This is one of those, the stock market has predicted 9 of the last 5 recessions. This is one of those instances where this is a bear market that occurred outside of a recession.
Well, I don't think I disagree with that. I don't think the market, I hear what you're saying. I don't think the market got it wrong because what if it wasn't stocks and certain stocks in particular crashing because fears of a recession, just because, or simply competition from bonds, higher cost of capital, lower multiples, lower earnings.
I think we were talking about at the time that like the stock market is definitely front running a recession, and that
true.
Obviously,
that particular narrative was wrong.
So maybe the narrative is the stock market fell because rates went higher, but now the Fed is still raising rates and stocks are going up. So this
we've already digested it.
I'm at a loss.
Now we're looking past. We're looking past.
Okay, now we're looking to the first cut, which is like next year or something. All right. So a lot of the talk lately has been about these big stocks getting even bigger. Ned Davis had a cool piece that showed Apple, Microsoft, Google, Amazon, Nvidia, Facebook, Tesla, those big seven that we talked about last week, are now bigger than the combined sectors of energy, materials, industrials, and financials. Financials being in there is kind of just mind-boggling to me.
That seems a tad excessive.
Doesn't it? I mean, I guess the counterpoint is these tech firms are so big and diversified that
That's not a good counterpoint.
Sectors within sectors. I don't know. So a lot of people are trying to figure out, like, what does this mean? DFA had this really cool chart that shows the average annualized outperformance, not just performance, outperformance of companies before and after they become in the top 10. So they show 10, 5, and 3 years before they enter the top 10, and then 3, 5, and 10 after. And you can see that outperformance is enormous heading into being in the top 10.
Naturally.
And then they get in the top 10. And the funny thing is, they underperform a little bit, but they essentially become the market when they get in the top 10, right? There's like very little outperformance or a little underperformance. And so all you have to do to be a successful investor is figure out the companies that are going to enter the top 10, and you're fine.
Yeah, simple.
That's it.
What I would say to this is, though, is like Apple, the recent top 10s have been in the top 10 forever.
That's the thing. Apple entered in like 2015, I think, by my count, maybe a couple of years earlier, but around then.
What about Amazon, Google, and Microsoft? And they've all continued.
I do wonder if the new tech ones are going to kind of bust some of these myths.
Well, they already have. They literally already have. We've been talking about this for years, and they keep creating new categories. AirPods, the watch. We've got the headset release this afternoon.
I'm sorry. There's never a headset I'm going to wear for anything.
Okay, fine.
Happy to back down on that one eventually, but I'm not going to wear anything that's going to make you look like an idiot. I'm sorry.
Well, I mean,
that's where I stop.
I think AirPods made you look like it. I thought that AirPods made people look like idiots early days. Now I know AirPods and headset they're not equivalent, but getting back to these giant stocks, what they're able to do with their margins is not like anything we've seen in the past with brick and mortar, industrial, old world.
This gets back to my
stocks.
point from last week about the indexes picking the winners for you. Look at this NASDAQ top 100 I did here. This was kind of cool. Y charts now allows you to look at the top 10 or top 25 historically, and this is a new feature they added.
How do they do that? Where is it?
It's under the fund. So if you have a fund like the QQQ, you can now change the date when you go to holdings. This is a new thing. I just learned it. Rushi showed me last week. I didn't realize that. So I went back to 2015, 2020, and 2023 to look at the top 10. And the NASDAQ 100 is way more concentrated. It was 50% back in 2015. Now it's 60%. But here's the thing. Even as of 2020, NVIDIA wasn't even in the top 10 of the NASDAQ 100. And also kind of surprising that companies like Pepsi and Costco are in there.
Yeah, they're weird.
Comcast was in there in the past. But that's how much this rise in NVIDIA has been. This is like the stock of the moment, I guess, for everyone to talk about, which means it's probably going to go up another 100% or it's going to crash with nothing in between, right? It's got to be one of those two. I do think that the stock is going to have just a mammoth crash at some point. I don't know from what levels. It's kind of like Bitcoin in some ways where you knew the crash was coming. You just didn't know it was going to come from 50 or 75 or 100. But I can't believe it wasn't in there in 2020 to enter the year. And now it's the fourth biggest name in the NASDAQ 100.
How about Apple hitting a new all-time high today? Is it going to be the first $3 trillion market cap? I don't think it hit it.
I think we essentially had two separate 30% corrections in Apple that you could have bought in the last 18 months.
So price is at an all-time high. Market cap is not. They were at a high of 2.97 trillion. Now it's 2.89. That's because of all the shares that they're buying back.
Here's another thing that we can pronounce dead. That this was anywhere in the same ballpark as the tech.com bubble. The dot-com bubble eviscerated technology stocks for years, sometimes like more than a decade. And some of them still haven't come back from it. These big tech names did not have nearly the comeuppance that the dot-com names had back then.
The smaller tech, the DocuSigns of the world, Zoom.
Right, Zoom, those ones did. But the big stuff, those are, I don't know. They're like it feels like I'm throwing out like Nifty 50 comparisons or something here, but those are like the new conglomerates these days almost, right?
These stocks?
I don't know. I just
all their different business lines? Yeah.
I just think it's
if you look at
pretty
a chart
impressive
of Apple,
that they had one bad year and a half, and now completely coming back in some ways.
Oh my God. That's so wild. So pre-pandemic. I'm looking at a. I'm gonna throw this in the doc right now so we could show it to the audience. I'm looking at a 10-year chart of Apple. Ben, check this out. Look how far back the peak pre-pandemic was. We're now like years removed from pre-pandemic. We're like 4 years later, which is kind of nuts. Time has sped up and slowed down simultaneously. But look how far back the pre-pandemic peak was. So it was, Apple peaked at 1.4 trillion right before the pandemic hit. Went from 1.4 trillion, didn't fall that much during the pandemic actually, to 1 trillion.
More than doubled since then.
And now it's close to 3. So it's about to triple off the lows from the pandemic.
Not bad. And to your point, I think it was 2014 or 2015 it entered the top 10, and it's still just going crazy since then.
Ben, when Josh and I were in Tampa last week talking in front of a bunch of advisors, and one of the things that I spoke about was how in the beginning of the year, a lot of people were saying, like, why take market risk when I can get 4%, 5% risk free, which was and is a reasonable thing that people say. Here we are, June 5th, and the NASDAQ 100 is on pace for the best first half to the year since 1991. We've spoken about this a lot. A book that we both enjoyed called "It Was a Very Good Year," and it was a history of the 10 best years in the stock market.
Yeah,
and I don't know about all of them, but most of them came after a very bad year.
Yeah, I own that book somewhere.
And here we are again.
And there were people arguing early. I wrote a blog post about this early in the year. People saying, why would I not just go clip 4 or 5% and sit out this mess of a stock market? And it honestly sounded like a pretty good idea at the time. And my point was, okay, you time the market. What happens if the stock market goes up a lot? And I wasn't predicting it at the time, but just putting it out there that this is a good possibility, especially after a bad year. And now what do you do? Let's say you shifted, half of your equity allocation into T-bills because you were earning 5% and you felt more comfortable there. Now what do you do? This is the hard part about market timing is the next part. If you're wrong, that's when it becomes really, really difficult to understand.
And guess what? What about if you're right? What if stocks did crash this year? Right? It's not like timing it if you're right is any easier. So anyway, there's been outflows for equities for most of the year. Money moving into short-term bond funds. But last week did look like a breakout for equities in terms of fund flows.
Now let's put this together. You get 5% in short-term T-bills, right? You get 30% in the NASDAQ, 10% in the S&P. The Russell 2000 is not getting you anything this year for small caps. That's a pretty darn good year for investors. If you're earning 5% in your short-term safe stuff and double digits in your stock market, and is anyone happy about the market right now? Not really, right? But
Not really.
That's a pretty good setup.
Well, here's why. Look at this tweet from Urban Carmel, who has a tweet thread of fund flow stuff and investor sentiment. This is what he put. So he tweeted this in January of 2023. Last year, retail investors sold all of the stocks they bought during the prior 3 years. That's just for the S&P. For the NASDAQ, they actually sold more than they bought. So coming into this year, investors, understandably, not poking fun at all, investors ran for the hills.
That's the soccer coach gif. Ooh, I don't know how they necessarily calculate this. I'm not going to call out Goldman Sachs, but don't we always hear from ETF people that we don't know who own our ETFs? I mean, unless this is just purely Robinhood data, or how do they know this? Because look at this next chart from the ICI that shows money coming out of actively managed mutual funds and going into index funds and ETFs. And it's a mirror image. The money coming out of actively managed funds is going into ETFs and index mutual funds. I'm not saying this data is wrong. I'm just saying, how do they know this? This is the actual stocks themselves, not the ETFs. Is that right? So I see S&P 500 stocks and NASDAQ 100 stocks.
Yeah, there's different charts.
Okay. All right. I can see that.
But yeah, I don't think anybody was all bowled up coming into the new year.
I guess it doesn't surprise me, though, that people are... I think it's easier to pull the ripcord on an individual stock than a fund. That's kind of seems like a stating the obvious, but if you own an individual stock, it's It's a little easier to just let that go if it's down 80%.
In
That's the other
fact,
thing that
all through 2022, what we were talking about was like historic negative sentiment from retail, from fund managers, from economists. And then we bottomed in October. Things started to bounce, momentum took hold, and then earnings delivered better than expected. And then here we are.
I
Apple
think one of
all-time
the
highs.
things people fail to realize when they buy individual stocks, though, like they hold up the Apples and Amazons on a pedestal and Nvidia, and like look at these massive gains you could get, but they fail to see that it's not out of the ordinary to see an individual stock have a 1987 crash like all the time during earnings season. Stock down 20-30% in a single day. That like if that happens in the stock market, it feels like the world's coming to an
Sure.
end. If it happens in a single stock, it's like, oh, this happens. Or a stock down 80% from its highs, which is essentially a Great Depression. So like you can have a Great Depression in 1987 in individual stocks all the time. And if that happened in the market, it would seem like the world it's Armageddon. And so I think people forget about that side of owning individual stocks. That like that stuff is way. People are always like predicting that's going to happen in the market, but it happens in individual stocks all the time.
Nvidia from 21 to 22 lost 2/3 of its value. Imagine you invest $100,000 into Nvidia right at the peak, and it turns into 30 grand, 33 grand.
And then you sell, and it round trips and comes back up.
Yeah.
There's probably people who did something like that. Okay, a bunch of good demographic stuff this week. The Wall Street Journal had a piece on the visual breakdown of America's stagnating number of births, and people are kind of concerned about this. So look at this, U.S. births and deaths going back to 1930. This is a really cool chart. They're kind of they're meeting each other, and deaths were way lower, births were way higher. Births are coming down, deaths are going way up. Yeah, that COVID spike is huge. The government tallied 655,000 fewer births in 2022 than the 2007 high of 4.32 million, reflecting ongoing diseases. This is a lot of COVID stuff, but also look at the U.S. fertility rate. Just look at that massive spike for the baby boom, and then it's come down, and it's way lower. And U.S. birth rates by age group is kind of a cool chart as well.
I think people should be having fewer babies. I don't know how controversial that is, but like our parents got married at 22, had 3 kids, and in my case, and a lot of other cases, like were divorced like 10 years later.
Both of my parents have 4 siblings, so they came from 5-child households. I don't know how I know a handful of people who have actually old high school friends who have like 5 or 6 kids, and I don't know how they function as human beings. I had a kid in my high school who graduated in my high school class who was the oldest of 13 children.
I mean, that's otherworldly. But I don't know what the median family in terms of like kids they had, but my mom too had 3 siblings, and then she had 3 kids, and I feel like I'm speaking for myself personally. 2 feels very manageable, and also, whatever. Anyway,
I think 2. If you ask people our age, how many kids do you want to have? It'd be 1 or 2 would be the most answered number, right? We had 3 on accident, and 2 was the number we were shooting for. So, but the reason people are worried about, and I agree, I think as nations become wealthier, they have fewer children. And obviously back in like the 1800s, people had so many kids because they were working on the farm and they were dying before the age of 5. And so they had to have more kids to give themselves a higher probability of having kids that survived. But the reason people are worried about this is because there's 2 ways to grow the economy. One is productivity and the other is population. Population growth is a huge part of economic growth. So, but is this too easy to say that like technology solves this? If we're having fewer people are saying like this is a huge problem. Because look at this next one from The Economist. So it shows population growth in the United States, Brazil, China, Japan, Italy, South Korea, and this is forecasting out until like 2100. And the U.S. is like the only one continue to grow, and I'm guessing that's because immigration, not fertility. And these other ones are just crashing. China's crashing. Japan's already crashing a little bit, and that's a big worry that like, okay, this is going to be a really big impediment to economic growth.
We could debate this in 2070. I don't know if having less humans on the planet is that bad. I mean, obviously I don't know.
But for economic growth purposes, on the face value, you'd think like that's not a good thing. If we're just talking growth, but can something like AI make us more efficient and fill in the hole and make? But
isn't there a tipping point if you extrapolate out? Let's just say that it went the other way, where growth kept going. Wouldn't there be a point where like we start fighting over like, and I know we're doing that today, but really, really, really fighting over scarce resources?
I mean, are you in the Jeremy Grantham camp now of we're gonna run out of stuff? That's the thing. My whole thinking behind this, like you could really worry about this. I think we figure stuff out. That'd be my default assumption until we don't figure something out. But that's kind of where I fall on this.
Yeah. Me personally, this stuff is not interesting to me. That's just maybe interesting
Really?
to you,
Okay.
not interesting to me.
Okay. All right. You don't care about the global economy. That's fine.
No, because I feel like this is all so theoretical. And maybe it's not theoretical. I don't know. It that doesn't necessarily pique my interest. That's all.
Okay. All right. Labor market. If the machines are going to take, maybe the machines are never going to take our jobs if we're not having enough kids because there's not going to be enough people for jobs. But jobs added by month since 2021. I did a nice little chart here from the BLS. We added over 7 million jobs in 2021, which that sounds impressive, but coming off the lows of the number of jobs lost in 2020, probably not that impressive. Last year, I think was impressive. 4.8 million jobs added. This year, 1.6 million jobs added. And the unemployment rate actually went up a little bit last month. The labor force participation rate for 25 to 54 is still at a 10-year high. So we've blown past the peak pre-pandemic.
I thought nobody wants to work.
I know. Well, if you listen to the tech bros, they think the government's making up the numbers, which is a strong possibility. I see no other, there's no other explanation for them being wrong about calling a recession than the government's making up the numbers.
Yeah.
The unemployment rate is actually 12%. They're just not telling you. All right. U.S. construction job employment. This one is crazy to me. Like, this is the weirdest housing recession ever. 64,000 construction jobs added in May, the biggest monthly increase since December 2021. Annual pay was up 6.7% in May, down from 7.1%. But we're in the midst of, like, I don't know. Is it still a housing recession or is that kind of over? But we keep adding construction workers.
Depends where you are. I feel like in my neighborhood, the housing market is pretty frozen. For new construction, it's a boom. For existing home sales, it's a freeze.
That's the weird part about it, though, is the frozen part of it doesn't necessarily mean like a bust, though. We're just kind of stuck. It's Austin Powers being frozen in 1967 and getting out in when did he get out? 1997, something like that. Right? I just caught that again on, maybe I saw the second one. I don't know.
Spy Who Shagged Me?
So good. Yes. All right. Someone sent me this. I've been talking for a while about why do we complain so much when the labor market seems like it's so great? And why does the Fed think this is such a bad thing that we have to like put people out of a job? So the Atlantic had a piece about this. I thought that was interesting by Orrin Cass. And saying that, like, why does the government think this is a problem? Even people who are like free market absolutists, like, let the market decide. Like, why do even those people think like this is a bad thing that people are earning more money and because of inflation? Basically,
my dog is staring right at me. I'm not quite sure why. What's wrong?
All right, so this is the kicker for me that I thought was interesting. Like the idea that tight labor markets necessarily have to mean higher inflation. So in the late 70s, as inflation was surging, the unemployment rate was 5 to 6%, like too high from what we'd think today, right? Through both the 90s and late 2010s, an unemployment rate of below 4% coincided with low inflation. And over the past year, inflation fell from 9% to 5%, and the unemployment rate fell with it. I think the idea that like a really tight labor market has to mean high inflation is not been proven out historically, even if that's the way it is in economic textbooks. I still don't understand why people want to damage the labor market so badly. Like why that is the default assumption for policymakers right now.
I guess I think it's the only way to slow price increases, which seem to be happening even though the labor market remains tight.
You know how you have a conversation with anyone and you think about a really good comeback like 3 days later or something to say? You asked me last week, what is the thing that now could give us high inflation going forward? And I thought about it more, and I thought, the easiest answer is just government spending. Like government spending is going to have to remain high to like keep this stuff going, and that's
do you mean?
The piece. Like just keep the party going, keep the economy going. I don't think the government is all of a sudden going to be able to like slow spending down, right? So I think that's the piece that could potentially keep inflation higher if we are spending a ton of money on, I don't know, rebuilding all the roads and construction and climate change and all this stuff. That's like higher. That's how we get 3 to 4% inflation instead of 2% inflation going forward.
But can they just stop?
Keep spending money. That's what I mean. Can they?
I don't know. You know who can't stop, won't stop? The consumer. This is from the transcript. On MasterCard's earnings calls. Here's a quote. The headline, as we shared with you as part of our Q1 earnings call, was we continue to see a consumer which is just remarkably resilient, and consumer spending continues to be remarkably resilient. Obviously, we're all tracking exactly what you're tracking from a macroeconomic environment standpoint. And as I look at our drivers and the performance drivers, which drive our top line, what we're seeing effectively is that through the first 2 weeks of the month of May, our drivers are generally in line with our expectations.
That guy said drivers like 6 times.
That's
right
a
there.
lot of drivers. I'm sorry. I'm just reading it.
Okay.
So Lindsay Bell did a tweet thread, excuse me. And she said, on the consumer, she said Target, Walmart, TJ Maxx, and a bunch of others either reaffirmed their outlooks or raised. Dollar Tree raised sales guidance and Gap raised margin outlook. The most important takeaway, those retailers cross various target shoppers with varying income levels. Retailers exhibiting weakness, on the other hand, operate in areas that benefited more greatly in the past 2 years as demand was pulled forward, like Home Depot and Lowe's and furniture retailers. All told, the consumer is hanging in there. They are resilient. Their resiliency is likely to remain at year end. This all comes back to the labor market. And if people have jobs, they're going to spend money. And
so maybe that's why the labor market is such a point of emphasis, because people obviously aren't going to stop spending until they lose their job. Like that's like, what else is going to stop people from spending? If 9% inflation didn't slow people down, what is going to?
Yeah.
Maybe that's the point.
I do wonder if Dollar General had a double miss and guided down. I wonder if consumers at the lower end are starting to change their behavior. So they said the macro environment is more challenging than the company had previously anticipated, which the company believes is having a significant impact on customer spending levels and behaviors. Now, who knows if this is a Dollar General story or a Dollar General customer story? Hard to tell, but it seems like by and large the consumer is hanging in there. CFO of Costco had an interesting quote. Historically, we've always seen when there's a recession, whether it was 99 or 2000 or 09, 08, we would see some sales penetration shift from beef to poultry and pork. We have seen some of that now.
Wait, what? So they're predicting a recession based on people buying chicken and pork instead of beef? What if people are just being more heart conscious and healthy with their eating habits?
Seems unlikely. But who knows? Maybe these would be potentially leading economic indicators, right? Is like obviously people's spending habits.
I know I've never heard of like a beef recession indicator.
Yeah, well, they have. Where's the beef?
I feel like someone has to say that every time, right?
Oh, last night. Let me ask you a question. Remember I told you one time that I left my barbecue on overnight?
Okay.
I told you this, right? And turned the piece of chicken into dust.
And somehow your house didn't burn down?
Well, the shingles on the back of my house melted a little bit. So
okay.
So last night I was cooking a steak.
How does that even happen that you forget a whole chicken on the grill?
I'm very absent-minded. In the airport, which has happened to me multiple times, I was sitting down and I realized, the Kevin thing from Home Alone, I didn't have my luggage. I left my suitcase in the store. So that happens to me all the time. I just will walk away without my stuff. Very absent-minded. What was I saying? Oh. That was funny.
You're telling a story about being absent-minded.
Yeah,
got absent-minded.
So I was cooking a steak last night. Now, are you not supposed to leave the top down on the barbecue when you're cooking a steak?
I'm not a grill master, so you're asking the wrong guy. I look like a grill master with a shirt, but I'm not.
So this was I don't know why, maybe I was just lazy, but 9 times out of 10, before I cook on the barbecue, I brush the stuff off from the previous cook session. Yeah. I didn't do that this time. I sprayed and I said, whatever, I'm sure it's fine. Maybe it gives you more flavor, who knows? And so I had the top down and I opened the barbecue and flames. Not just flames that came out of the barbecue, but the barbecue was on fire. And I immediately turned the barbecue off, but no, there's a fire. And it wasn't being fueled by gas. It was being fueled by, I don't even know
whatever you left on there.
Whatever I left on there. So anyway, Robert's like, what the hell is happening? Because I ran back in and I filled up a pot of water and anyway, all's well that ends well. But I don't know if the fire was caused. I'm sure please, if you're a grill master, let me know. Did I do the wrong thing by closing the grill, or did I do the wrong thing by leaving the remnants on from the prior time, or were they both wrong? And shame on me.
Getting a Traeger grill is the new midlife crisis too.
Getting a what?
one of the Traeger egg thing grills and like cooking brisket for like 18 hours every weekend. Like that's a 40s dad thing for sure. I never got into it yet, but I know a lot of dads who did.
See, that's for middle-aged guys, so I'm not quite there yet.
Okay. Keep counting down the days. All right, remember when egg prices were the big talking point? We had a couple. All right, egg prices are going on sale just months after hitting record prices. This is from the Wall Street Journal. Look at this chart. Huge spike, come back because of the avian flu. This is the kind of thing where people get all up in arms when something goes up in price and complain the world's coming to an end. Price comes back down, no one cares.
Correct.
Right? This is why, like, bad news is the headline, good news is process, and people just kind of move on to their lives. I do think, like, these past few years have given a good reminder to us of, like, sometimes it's kind of crazy to think about how the world just continues to run at all. With all the products and services and stuff that we produce, the fact that we had an interruption and people realize, like, oh, that's right, like, there's a process to all this stuff. This stuff gets made here, and it gets shipped here, and it gets moved here, and the price, like, the fact that we don't have more problems with this stuff is actually more surprising to me than the fact that we do. Fair?
Yeah. World keeps humming along. All right, ZipRecruiter.
I don't care about this stuff, right? Is eggs falling to demographics for you?
Listen, are you gonna? I don't care about. I'm not a demographics guy. It's just not my. It's just not my jam. It's not my beat.
You're never gonna go on Harry Dent's podcast now. You think that guy has a podcast?
Oh yeah. So layoffs. I think we spoke a couple weeks ago that it's been pretty quiet. Well, ZipRecruiter, which is a recruiting company, of course, is cutting 20% of their staff. So is that signal or noise?
You don't hear as many ZipRecruiter ads on podcasts anymore.
Nah, I feel like that's a big ringer thing.
Just because now it's so easy to get a job, though, right? Isn't that the idea? Like, you don't need a recruiter to get a job for you?
Oh, so maybe. Oh, are you going the other way? The economy is too strong for ZipRecruiter?
Yes. ZipRecruiter works better if there's high unemployment, correct? What do I need ZipRecruiter for? They're throwing jobs out the window to people.
Very, very.
We did that simultaneously. That was nice.
That was good. For the listeners, Ben and I just did the guy pointing to his head GIF.
All right. So I think both right and wrong. VCs are the biggest momentum investors on the planet. This is from Fortune. Global VC capital raised for crypto firms, and it slowly but steadily rising in 2018, 2019, 2021, and 2022 was just massive. So almost $22 billion in global VC capital raised for crypto firms last year. This year, it's $500 million. This chart almost doesn't look real even.
Yeah, this is wild.
I mean, again, they are truly momentum investors. And maybe you would say, well, they invested so much in these preceding years that they're just, it's been invested, let's see what happens. But has venture capital completely left crypto for AI at this point?
The answer is yes.
So, because that was honestly one of the better bull cases for crypto is just there's so much money going into there. It has to
lead to something.
It has to lead to something.
Too early to tell.
What if they just completely turn the spigot off and they just let a lot of these companies die and say, look at this shiny new AI stuff we're investing in. Don't look over there at this stuff. Look at this.
Well, here's a chart from Michael McDonough. Artificial intelligence versus metaverse-related mentions on publicly traded company transcripts and earnings calls. And the metaverse was never really, really a thing. I know
Facebook changed their name to Meta.
Yeah. But compared to AI, it's look at this recent spike. It's pretty comical.
But this is the thing. I think this is why you can see both sides of like the tech debate about like these people are idiots that got lucky or they're geniuses, is that sometimes they do just throw stuff against the wall and see what sticks.
Well, they have to. I feel like, especially for AI, and I feel like for these guys, like they can't miss this, right? It's not about what you get wrong; it's about what you get right. And this is like one of the big drivers of the engines of our economy is venture capitalists that are willing to put money on the line to create prosperity for the rest of us. I'm not saying that like they're like Mother Teresa or heroes or anything like that, but look what we got over the last 10 years that was funded by venture capital.
But this is also why I just don't like the narrative that all venture capitalists say, like, I'm a contrarian. I was investing when no one wanted to invest. They're not contrarians. They are momentum players through and through. Like like it's just chasing the dot, right? Like
So, well, that's that. I mean, in our little corner of the world, I speak to a decent amount of venture guys that invest in our industry, and everyone's pulling back. Nobody's like, you know what? I'm going to be a contrarian. Now that everybody's pulled back, I'm going to go in. I haven't heard one person say that.
right. But I think that's just that's the way that this industry works, though.
Yeah. I think it's also it's a small industry where people are more likely to follow the herd and stand out.
Well, and the problem is you can't, unless you have a huge checkbook, you can't be the only investor, right?
Sure.
You need other investors to come with you.
That's true. That's exactly true.
So like maybe they have to be momentum investors.
Did you know that there are 13 AI unicorns already? Sounds high to me. Because the only one that I really know of, in fact, the only one that I know of is OpenAI, which is set to try to raise $100 billion.
I know I've mentioned this before, but the only one I want is I want my AI assistant in my ear, like on her. Like
very good movie.
I saw that and I thought, like, if this is where technology is going someday, like, sign me up. Like, hey, go through all 10,000 of my emails, pull this, add these charts. I just hope someone creates that. That's all I want.
I was watching. So Kobe and
I don't want to date my AI, but yes,
Kobe and Logan are on a Spider-Man kick. So I was watching Spider-Man 2, the one with Dr. Octopus.
My son George loved that one too. That's a pretty good one.
And they were asking, as he's like doing the thing, when he puts the suit on, they're worried about like, well, what if these artificial intelligence arms become too smart? He's like, that's why I've got this the chips. So yeah. Spider-Man 2 ahead of its time.
And then something broke the chip, and isn't it funny when all those superhero movies, it's like there's this one little thing in your body that's controlling it. Like Robert Downey Jr. as Iron Man had like the fake heart thing. It's always just one little thing that's holding everything together.
That's a great scene when Dr. Octopus, when they're trying to like saw the arms off of him, and he's just like face down on the operating table, and the arms are doing their thing. Remember that scene?
The origin stories are always the best ones for those. That's I kind of give up half to the origin stories. All right, you mentioned the housing market in your neighborhood being frozen. I think one of the reasons. So I talked to a realtor friend of mine this week, and she said, I've never worked harder to try to get people houses, but people tell me what they want, and there's nothing. They can't find anything. And when a house does come on the market, it's way overpriced for how much work needs to be done to it. Mm-hmm. And there's 30 people who are willing to bid on it because there's so many people looking to buy. And so Alex Thomas from John Burns tweeted this out. Even at 7% interest rates, 78% of all real estate agents tell us that buyers outnumber sellers in their market. And the buyer number is going up.
This is a demographic story that I'm interested in because it's not 10 years from now, it's today. Or 50 years from now, it's today.
True. Yes. And I think that's the whole thing of it is just household formation for young people. Redfin has the housing payments up 15% or year over year to a high that we talked about before. There was this Fortune story about a couple who has a $600,000 budget. They have a child on the way, and they just can't find a house. So they said in the 2 years that they've been house hunting, they've put down countless offers, raised their budget substantially, and compromised on location from central to north to South Jersey. When they first started looking, their budget was $500K. That quickly changed after seeing disasters in that price range. After years of searching, they pushed their budget to $600, and they still haven't closed on a home. This is just so depressing. Their initial strategy was to wait for prices to drop, then enter the housing market and start their life as a family. The guy said, they're not dropping, and now we're shit out of luck. I got a baby coming in a month. Like, we're out of luck. Ugh. I can't imagine being in that position.
No.
Where they talked about, like, countless times they offered $50,000 over, and they're like, compromising everything they want in a house. And they've moved down and all this stuff. It's got to be the worst. Affordability is terrible, and there's no houses on the market.
I think the best option for people that are in this unfortunate situation is to rent.
The counter to that would be rent is going up too.
Yeah, true.
I think that's actually slowing though.
I mean, talk about
rent is slowing.
Being stuck between a rock and a hard place. This chart from Redfin of home buyer housing payment, like look at 2020. It was like less than $1,500 a month for the average mortgage payment. $1,500 a month. In May of 2023, it just hit $2,650. That's absurd. That is absurd.
That's one of the things that makes this so difficult. It's not just the increase. It's that people didn't get a chance to acclimate to the increase. It happened so fast, and you can look back and say, oh, I missed it. In 2021 and 2020, it would have been so much more affordable, and I was right there.
How come how come this dynamic hasn't curbed consumer spending? I think the answer is because people that are trying to get into a house is still a very small part of the overall population. Very small.
It's a smaller part. So there's this personal finance rule of thumb that I've heard that you want to spend like 28 to 30% of your gross income all in on housing. And I think the thing Ramit said to us a few weeks ago is like, when you rent, your payment ends, right? That when whatever you pay for rent, that's it. But when you own a house, your mortgage, like there's still more on top of it. So add all that in insurance and property taxes and all that, it should be like around 30% of your income. I mean, that obviously, like every personal finance rule of thumb, is very circumstantial. But look at this chart that I created. Mortgage payments using median existing home prices, so not new home prices, as a percentage of median household income, going back to 1989. And it dropped.
Wow.
But look at the drop even in the 80s and 90s, it was much higher because mortgage rates were higher, I think. And incomes have actually, on a real basis, incomes are up over that time. And look at the increase. But look at, it's easy to say this now. In the 2009 to 2016 or 17 range, a generational buying opportunity for housing prices. And if you bought back then, you should consider yourself very, very, very lucky.
That's why I bought 6.
Would have been a good... All right. New study on money and happiness from University of Pennsylvania. You've heard like the Daniel Kahneman one that up to 75,000, your happiness increases, and then it plateaus or whatever.
The number is not right, but it's definitely directionally right, like 100%.
So there's a new study that decided to let's look at this a little bit, and that they said happiness rises with income until 100 grand, then shows no further increase as income grows. But for those this is for people in the least happy. So they segmented people out into happiness, least happy, median happy, like very happy, and then they said people in the middle range of emotional well-being, happiness increases linearly with income. And for the happiest group, the association actually accelerates above 100,000. So they broke it up into what's your emotional makeup? And I think that actually makes more sense that for some people, the money is never going to be enough because of the way that they're hardwired.
Right.
Right? It's just, and for other people, they're going to be happy with what they have. I think a lot of it is, I think a big piece for me is seeing, I talked about the gradual increase. I can look back and see in my 20s, pretty much to my mid-30s, I did not make a lot of money. My very first job out of college, I was making $30K a year. I was making, and I had friends who were making way more than me.
At least you had a job.
That's what people were saying back then. You should be lucky But I think having that ability to see it slowly rise instead of being 25 and making $300,000 or whatever it is, some people do. And I think that screws your perception of reality way, way more. And I think the ability to look back and have some sort of gratitude for, And the funny thing is, in high school and college, growing up, in high school and college, I had zero money. My net worth was negative, and those were some of the happiest days of my life. So, I think it is all relative in terms of your relative disposition on life, as opposed to some number.
Also, in high school, in college, you didn't need a lot of money. If you're a 40-year-old person with no money, you're probably pretty miserable.
Fair. All right, so I got the ping, that's my annual insurance premium for my house coming up, and it was $2,000 higher than what I pay. I've been a client with them I've had them for my auto insurance. I use them for boat insurance, for home insurance, and I get all these bundled, and they're
Tell them you're switching to Verizon.
So I said, what's going on here? Why is it because housing prices are up? I don't understand why, and it was triple the price. The annual price, because I always pay it, I pay the whole thing, so you save a couple $100. And they basically said, I don't have a good answer for you. It just rose. And I'm like, well, I've been a customer for how many years? For 15 years. Anything you can do for me? They said no. And so I got a quote from somewhere else that actually was $200 less. You know what I used? Thank you, Mr. Buffett. I used Geico.
There you go.
But it was easy enough to just find a thing online. Just shopping for insurance is so easy. It took me 10 minutes to fill out an online form. Someone called me, I answered 3 questions, and that was it.
I actually have an insurance broker that I use for everything.
I feel like in New York you use a broker for everything.
Well,
you have a broker for your car, you probably have a broker for your grill you bought. That's such a New Yorker thing to have a broker for everything.
The insurance broker thing is great because he deals with everything. Like, God forbid I need to put in a claim. But besides that, like when you get a new car, do you have insurance coverage? Instead of
That's right. You could have put a claim in for your siding when you almost burn your house down.
Call my broker. Ben, I've got an email pet peeve.
Okay.
I am not a pet peeve person. If somebody said like, what are some of your biggest pet peeves? I don't know that I would be able to come up with one. Well, I don't know that.
That's my biggest weakness. I care too much. And
I'm not.
Is that what you're saying?
Like I said, I'm not that observant, I guess. I don't really have a lot of pet peeves. But here's one of them. I would say that my email response, not for like cold, but warm intros, my response, my hit rate is like, I think I'm like 96% good. I'm making that up. Here and there, I will forget to respond to somebody. But what I'm saying is, for the most part, I do get back to somebody via email. Okay. I'm just laying the groundwork for what I'm about to say.
Yeah, not to brag, but I get back to everyone who emails me.
No, because I'm about to shine myself in a bad light. So I just want to say that this is atypical. When you get an email intro from somebody, and then they respond to you, and you don't respond back, and then they follow up with you, and they continue to CC the other person who made the intro, I feel like they're tattletaling on you, and it makes me want to respond less. It's like,
I see that.
Just follow up one-on-one, person to person, and I will say, hey, my bad. I apologize. Whatever. Didn't get to this. Sorry.
We're moving the third party to BCC.
Yeah, it's. I feel like that person's treating me like a child. It feels like childish behavior. You know what I mean?
You want to know what gets me sometimes? I can't stand people who abbreviate thanks to THX.
Josh does that.
Like the email, like the only response is THX.
Yeah, how hard is just writing thanks?
Yeah, how much time did that really save you?
Yeah.
That's all I'm saying.
So anyway, the person I kept an open mind. The person that did that happened to be perfectly pleasant. I wasn't like totally judging the person. I'm not, but it's annoying.
They really wanted to talk to you.
I just feel like the proper email etiquette is to not do that. All right. I thought that travelers were going to like get it out of their system, right? The when the economy reopened, everyone did the Disney, the this, the that. They're still going. USA TSA checkpoint number on a 5-day average is breaking out again.
Think of how much we've been Duncan before we got on the podcast asked. He said, "Is this normal for you guys to be traveling this much, or is this back to pre-pandemic?" And I feel like people are packing it in again these days. We've been on the road way more lately.
Way more. And so I have a quick airplane story about a hero. This is the opposite of a pet peeve. Understandably so, when you're walking down the aisle, somebody will like pull on your seat as they're walking by.
Yes.
Which is not an egregious thing to do. It happens. But one guy did it to me, and he said sorry.
That's all you need, right?
That's all I want. Just sorry about that. Because it is quite jarring. You know what I mean?
It's like someone cutting you off on the road. If they like acknowledge it and say, "My bad,"
I love that person.
That's all you need.
That like makes my day.
Yeah.
Ben, we spoke about like with the gratuity stuff just going too far. So in the hotel, I got just a Chobani because I needed something quick for the go. A Chobani is just a Greek yogurt. It was like $2.50. And sure enough, they gave me a receipt with a gratuity that I need to sign. And guess what I did? I'm sorry. I had to draw a line. Literally, I drew a line across the tip spot. I did not tip it on Chobani.
Well, you know what you do? I would just sign my name and don't total it out. I'm not even going to acknowledge that there's a tip on there.
Imagine.
Yeah, that is a lot. I feel like if they open the yogurt for you, gave you a spoon, put it in there, yeah, maybe you could deserve a tip.
So Josh and I were talking about Succession and what's next on HBO. And I guess he was saying like The Last of Us season 2 is going to come back, which I'm not super interested in, to be honest. I feel like, I'll watch it, but what's the next big show? So somebody tweeted, HBO's run of House of the Dragon into The White Lotus season 2 into The Last of Us into Succession season 4 might never be topped. What a heater they've been on.
Boy, that is true. But I mean, we also had that period of Mad Men with Breaking Bad. There was a lot of good shows on at once, and we felt like, okay, that's never coming back again. I still think these streamers, even if the stuff dies down a little bit because we're on the writer's strike or whatever, they're going to have to continue to try pumping out stuff.
I mean, we are entering a major TV lull, like major, which is fine because it's the summer. But after the finals are done, I've got pretty much nothing.
Yeah, it's true. So someone emailed us. We talked about LG TVs and why all hotels have them. Someone actually emailed us and
Oh
said,
yeah, let's hear.
as a previous corporate hotelier, is that a name? Hotelier, is that a thing? I've actually met with LG's B2B hotel team. Can explain why. Hotel TVs are not like regular TVs. They have dedicated modules built into them and allow interfacing with the hotel's operating system. That must be how we get Mario Lopez. Pay-per-view, all this stuff, and LG TV, I guess, has that. And that's why there's LG TVs in all hotels. Like they make them specifically for hotels. That's why it takes 6 seconds to change every channel.
All right, not to beat this dead horse, but I've just got a bone to pick with the whole ticket industry. So
Wait, to the man who has no pet peeves, let's talk about ticketing again.
that's not a pet peeve, but fair enough. So I am done with that site that we keep mentioning, and I went to an alternative because Ben and I wanted to get Sean, who works for us, an early Christmas present. He's in Denver. And so I thought, wouldn't it be nice to send him to the Nuggets game? Like, how much fun would that be? So we got him a ticket, and so I just don't get it. It was a 25%. So I'm looking at the price. I'm like, oh, that's expensive, but whatever. It's NBA Finals. And then boom, service fee, 25, 30%. But they're doing it on both sides. I just don't understand. The margins of this business obviously are not. There's more than meets the eye, right? Because if they're taking 50% gross, what are they paying to the arenas? And somebody sent us a whole article about like Taylor Swift and Pearl Jam and Bruce Springsteen and people getting pissed off just for years with Ticketmaster and just the unfair practices. I guess it just is what it is. Like I don't really know what
the solution is. Obviously, yeah, people don't. It must be too complicated to make a good solution.
Somebody emailed me saying that they took a 3-hour drive and went straight to the arena in order just because like they were so fed up with Ticketmaster.
Oh, to buy it from the ticket box?
Yeah.
Jeez. Okay. Recommendations. I thought the season finale of Dave was one of the best episodes of television all year. There was probably 2 or 3 episodes in this season, but I couldn't believe. So Rachel McAdams was on the last 2 or 3 episodes, who was just a delight. And all of a sudden, he's doing a Rachel McAdams rap, and Brad Pitt sticks his head in. And I thought maybe Brad Pitt sticking his head in was going to be it. I didn't read any stories about this. I didn't know. I didn't realize Brad Pitt was going to be on. I texted you. I said, "Holy crap, Brad Pitt!" And he was on the whole episode. He was. I mean, it's kind of seems like it's the obvious thing to say. Brad Pitt was amazing on this show.
So no spoilers, but the scene where they're like mouthing what to do in that scene to each other.
Yes. I rewound it because I was laughing so hard.
I thought so when he made an appearance early on in the episode. I just thought that was it. I thought he was going to pop his head in, but that
was it.
He was the star. I mean, him and Dave. How did Dave do it?
There was a Rolling Stone piece on it saying that they had production company people that knew each other, and Brad Pitt had said like, "I like this show," and they worked through back channels to get him on.
He got Drake.
But I thought Brad Pitt was just hilarious. The whole setup was just, oh man, I thought season 2 was like a little plateau for Dave. I thought season 3 went up a level.
Was the Drake thing a dream?
Oh, that's a good question. I don't think so. He said in the interview that it wasn't. I don't think. I think he's working on himself. So.
Yeah, man, what a show! I'm sad to see.
So I've been doing a lot of finales lately. I stuck with Ted Lasso. Season 2 was just not good at all. I thought season 3, it was very up and down and uneven, but it was the last season. I didn't realize it. The finale, my wife and I were looking like, wait, is this the actual finale? It's the kind of show where you want them to tie everything up in a neat bow, and they kind of did. And I actually appreciated the finale, and I liked it. The show was very up and down in the last 2 seasons, but I'm glad I stuck with it.
Oh, how's the Silo? Ramp keeps telling me to watch it.
The first episode was amazing. It's in the middle is kind of gotten a little boring for me. I'm sticking with it, but it's people keep telling me to read the books. That it's definitely stalled a little. I need some more coming, but yeah. And also one more. I watched A Good Person. Zach Braff wrote and directed this. Just so depressing.
I've never heard of it.
Like I don't mind like a little bit of depressing, but it was like the whole movie was just dealing with death and unexpected death and substance abuse and all this stuff, and it was a good acting performances, but way too depressing for me.
All right. The Super Mario Brothers movie has grossed 1.3 globally. It's the second highest grossing animated film ever, passing Frozen, which is insane.
Can we talk about how you say the name there? Mario.
Mario?
It's Mario.
I know it's Mario, but I'm sorry.
You always, I'm just, had to throw it out there.
Fair.
I let it slide a few times.
Fair. So they're going to beat this into the ground. And you know what? My prediction for because I mean, nothing feeds on success like success, or I don't know. You know what I'm talking about. Copycat. Zelda. They're going to make a Zelda movie.
Oh, yeah. So they're going to make one for every Nintendo. You know what would be a great one? Contra. I'd watch a Contra movie.
Oh, yeah. Yep, with Chris Hemsworth.
Yeah.
So not only are they going to make, so Zelda's a Nintendo one, but they're going to, I don't mean just Nintendo, they're going to make every video game movie.
Yeah. No, my kids, we rented Mario or bought it on streaming or whatever on Amazon and watched it 6 times already.
Yeah, same.
It's good.
All right. Great airplane movie, Missing. You ever hear that one?
Wait, which one is that? It sounds familiar.
I'm very big into the person disappearing mystery. So
is this a new movie? I've never seen it.
Yeah, it's new. A girl's mom disappears and she uses the internet to try and track her down. And, you know, it's pretty convoluted and incredibly nonsensical, but for an airplane movie, it's a good one. Real good one.
Okay.
I also needed, so I had like 25 minutes left in the flight that I needed time to kill. And I needed a movie that I could like pass out to. So I put on Remember the Titans, which I saw probably 100 times. Well, it's been a long time. And it made me feel very old. The movie is from 2000.
Wow.
It's almost 25 years old. What?
It's like Ryan Gosling's intro into
Remember the Titans is almost 25 years old. Unbelievable. All right, lastly, this is also airplane material. Fubar is a ton of fun. It's the new Arnold show on Netflix. It's got some True Lies-ish stuff.
Does he like play himself?
No, it's like True Lies. He plays a CIA agent, and it's light and silly, and I just love hanging with Arnold. Could hang with that guy all day.
Okay.
All right.
animalspiritspod@gmail.com. I think we're still waiting on some more Tropical Brother shirts to be reloaded, but we will let you know when they're back because we're all out of small, medium, and large.
Really?
You want a double X or an X? XL or double XL? I think we still got those.
Okay. You know, here's the strategy. If you really want one, get a double XL and wash it and dry it 100 times to shrink it.
All right. See you next time.